If four things are followed, having a great aim, acquiring knowledge, hard work, and perseverance, then anything can be achieved. APJ Abdul Kalam. My friends, each and every day, 10 to 15 minutes, that is all we ask. Your aim is to learn how to chart these markets, acquiring the knowledge each and every day, working hard those 10 to 15 minutes, and persevering day after day. The key is that 10 to 15 minutes each and every day. It adds up, it adds up, it adds up into working knowledge. And if you're not in the market every day, you're not catching the nuances of the ETFs and the stocks that you are charting. Let's jump into these charts today. I will tell you where we are, and things are looking good. I'm watching the numbers increase on our directional probability. And those of you who are Patreon members, of course, you get each and every day the updated 5-day plus ETF trading analysis and execution plan. We post the prior one at the end of course, the prior, well, at the end of the day after, which is today. We're posting Thursdays. And of course, you can find it at our Patreon page there, where it is released each and every day. And Patreon members, we email you, of course. Today, you not only got earlier in the day, you got the 5-day plus ETF trading analysis and execution plan. You also got the weekly vertical crossovers. We had 5 going up, 6 going down, and those weekly vertical crossovers are our favorite way of trading. You can see on the weekly chart when it rotates over from down moves to up moves. And the classic is the setup we see right here, where the market bottomed out with lots of volume, nice big down candle, no move on top on the red down candle, nice wick on the bottom, and then a turnaround with a doji. The only thing that didn't make this the classic, most beautiful turnaround that we like, we saw one over here after 3 weeks of down movement back in August of last year. And then you have a green spinning top with average volume. We didn't get to average volume. It took a while, a long while, because we had such a high peak of volume with the crash, and we just couldn't quite get back up to it for a while. It had to come back down to the average. So that threw things off a little bit. You know, we are aware of that. When you see these volume spikes and the average goes way up, you can give yourself a little bit of a lean there. And then, of course, when things took off, they have just kept shooting up, 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 up. And another up day, not a lot up today, 0.03. But as we look at our probability, it is rising higher. Our backtest accuracy is moving up on the S&P. And look, we're already up to average volume on the weekly, and we still have another day. That is beautiful. The first day of the latest 2-day candle, not quite half. We'll see what it looks like. But look at the half-day chart. I mean, we have days and days of average volume as the market just continues to move right up. The weekly trend line higher high this week, just gorgeous. That's why we're long. Now, I keep warning you, we are paying attention to any signs of problems and this market pulling back, but it's not doing it yet. Let's look at where we are with the Qs. It's up 0.21% for the day. As far as its directional probability, it is increasing also. Backtest accuracy is increasing also. And things are moving up this week to a higher high. We're almost up to average volume already on Thursday. We look okay on the 2-day. And again, just continuing to move up on the 2-day and the half-day. You can see where the volume peaked in the afternoon, popped up for the highest in the afternoon. And again, just things moving up nicely as we have expected them to do so. I would encourage you, Patreon members, those of you who want to go to the Patreon page and check it out. We freed up Wednesday, which is actually Thursdays, because we always do it for the next day. But Thursday was freed up this afternoon, and you'll see the way we set up our analysis. We give you each of our 5 ETFs. We detail for you the price direction prediction, the best trade entry point, the strategic profit exit point, the expected price move, the back test results, where they come from, and then the key patterns that we see in the Heikin Ashi candlesticks own the three different time frames that we have. The half day, which is actually 195 minutes. It's not 4 hours. If you're using 4 hours, change it. 2-day chart, our intermediate chart, and then our long-term chart, which is the weekly. Things are looking great. Let's look at where we are on the only bearish position we have, and that is on bonds. They are down for the day, 0.17%. Really curious how this week is going to end. We've seen this green spinning top slack off some. It was thicker. It's thinner now. Maybe it's going to die on the vine, but let's look at where we are on volume, because we have an interim low. We still have a green spinning top. If it gets up to average volume, we see an update tomorrow. I may very well go long on bonds, because that is a telltale sign for me that things might be changing. Bonds pulled back a little bit for the day, 0.17%, but let's watch, see where that volume comes in, how this week ends up, and if indeed we're going to have a turn. We're still below the trend line on the 2-day, sitting right there on it on the half day, and just below it on the weekly. So we'll see as we slide into Friday. What about gold? We're seeing gold increase, and again, it is the number one most bullish of the 5 ETFs, the 4 that are actually bullish. It's the most bullish of those, and it has increased in its bullishness directional probability for the next 5+ days, as has its back test accuracy. Now, gold did pull back a little bit for the day, but that hasn't stopped us in increasing our probability of continued up movement. So let's see how this week ends up. You can see all the volume for the week. Not a lot of volume on the 2-day after it pulled off. It didn't penetrate on either one of the charts. Second day of some down movement, but we will watch as we get into Friday. Let's see what gold does. But we are still strongly bullish on gold. Now, the last thing we're going to check out for you is Bitcoin. Bitcoin has been sliding sideways. You can see it on that half-day chart for many, many days. You can see it on the 2-day also, where it popped up to its high of highs back on the 2-day candle beginning Monday, the 14th of July. You can see it on the weekly chart also for last week. And then you can see how it slid sideways and has penetrated on the 2-day candle, not on the half-day, but has penetrated the weekly trend line. We are still bullish. We're, again, like I said, gold is our number one most bullish ETF. And then tied is the S&P and Bitcoin, HODL. So again, we'll keep our eye on things, up a little over 0.5% for the day, see how much things are going to heat up. We're already up to average volume. Remember, when you see red volume, doesn't mean that it's negative volume. It means that that this candle opened lower than the prior close on that prior week, the 14th. That's all that means. But it's a helpful sign to know there was some weakness there. So that is where we are as we end the day on Thursday, as we go into Friday. Lots for the Patreon members to take a look at tonight. Of course, you've got your 5-day plus ETF trading analysis and execution plan with all that data, along with your trade execution summary grid, and you have your weekly vertical crossovers. That is where we are, my friends, as we end the day on Thursday, go into Friday. Hope you've had as great a trading week as I have had, and we just appreciate you. Always love to hear from you. CW@chartingwealth.com. God bless. All the best from the whole team at Charting Wealth.